In this video, we explore the current state of Bitcoin and the broader cryptocurrency market, delving into the factors behind Bitcoin's price fluctuations, a topic gaining significant attention recently. For new investors, the allure of high returns can be enticing, but recognize the inherent volatility and unpredictability. Many are drawn by success stories, yet must be aware of potential pitfalls. Understanding the risks and opportunities for new investors, providing actionable insights by empowering our audience with effective investment strategies. The current cryptocurrency market is witnessing an unprecedented rise in Bitcoin's value, a phenomenon that has captured the attention worldwide, with its price reaching all-time highs that were once thought unattainable. This remarkable ascent has significant implications for the entire cryptocurrency ecosystem. Bitcoin's rise has brought a surge of new retail investors into the crypto market. This surge is fueled by increased media coverage, user-friendly trading platforms, and growing acceptance of cryptocurrencies. At the same time, many are drawn by high return potential, inspired by success stories. But this influx raises concerns about market volatility and speculative bubbles. It is crucial to understand the market's dynamics for a successful investment in cryptocurrencies. The crypto market operates 24/7 with high volatility and is influenced by regulatory developments and technological advancements. Investors must understand these dynamics to navigate effectively. The rise of Bitcoin led to numerous alternative cryptocurrencies, or altcoins, presenting opportunities and challenges for investors. Some altcoins have gained traction and strong performance, while others lack stability and credibility. The current cryptocurrency market, especially Bitcoin, is significantly influenced by institutional investors. Institutional investments are reshaping perceptions of digital currencies in the financial system. The emergence of altcoins highlights the need for education to understand and navigate the evolving crypto market. The concept of M2 money supply is critical in understanding the broader economic landscape and its relevance to Bitcoin. M2 includes cash, checking deposits, and easily convertible near money. Tracking M2 helps gauge liquidity, impacting market valuations, including cryptocurrencies. Increased M2 indicates more money circulating, driving up asset prices. The connection between the M2 bull market and Bitcoin's potential price surge is noteworthy. Investors look for alternative assets to hedge against inflation and currency devaluation. Bitcoin, often called digital gold, has gained traction as a store of value. Its limited supply, capped at 21 million coins, makes it a deflationary asset. As the M2 money supply grows, demand for Bitcoin may increase. The narrative of Bitcoin as a hedge against inflation has gained momentum. The expansion of the M2 money supply has significant implications for inflation and asset prices. As central banks increase the money supply, concerns about inflation rise, influencing investment strategies. Bitcoin is increasingly viewed as a hedge against inflation, attracting both institutional and retail investors. The influx of capital into Bitcoin as a hedge can drive its price upward. The psychological aspect of market behavior cannot be overlooked. Rising prices attract more attention from both retail and institutional investors. This FOMO effect can lead to a self-reinforcing cycle, driving up demand and valuations. Investing in cryptocurrencies can be enticing, given the remarkable returns some investors have experienced. However, it is crucial to address the inherent risks of this volatile market. One significant risk is the extreme volatility that characterizes cryptocurrencies. Prices can fluctuate dramatically, leading to substantial gains or significant losses. It's not uncommon for a cryptocurrency to experience price swings of 20% or more in a single day. Such volatility can be alarming for those unaccustomed to rapid changes. Investors must be prepared for the possibility of quick value loss, and should only invest funds they can afford to lose. Given the risks of volatility and potential losses, a cautious approach is crucial for new cryptocurrency investors. Educate yourself about the market, blockchain technology, and price influencers. Understanding blockchain fundamentals and market dynamics empowers informed decisions. Start with small investments to gain experience without risking much capital. Diversification helps mitigate risks by spreading investments across multiple assets. The psychological aspects of investing in cryptocurrencies can pose risks. Emotional highs and lows can lead to impulsive decisions, harming portfolios. Cultivate a disciplined mindset and avoid trades based on fear or excitement. Stick to a clear investment strategy during volatility to mitigate emotional impact. The cryptocurrency market is young and evolving, with both opportunities and uncertainties. Be cautious of projects with grand promises but no solid foundation. Conduct thorough research to avoid scams or poorly executed projects. While exploring lesser-known cryptocurrency projects can be intriguing, it is crucial to address the associated risks. The volatility of these projects can lead to substantial losses. A cautious approach is important. Education, realistic expectations, and prudent strategies can help mitigate risks and diversifying investments. This way, investors can navigate market complexities more effectively. In this video, we explored critical aspects of investing in cryptocurrencies, emphasizing the importance of understanding market dynamics and developing effective investment strategies. As the cryptocurrency landscape evolves, we discussed how the volatility of cryptocurrencies can lead to significant price fluctuations by recognizing the unique characteristics of the crypto market, making it crucial for investors to stay informed and prepared for potential risks. We also highlighted the significance of conducting thorough research and the importance of understanding the fundamentals of various cryptocurrencies before making investment choices. Can empower investors to identify promising opportunities. Additionally, we discussed the value of focusing on undervalued projects and exploring emerging sectors. While diversifying portfolios and adopting a cautious approach, we also addressed the risks associated with cryptocurrency investing, including the potential for significant losses and the psychological challenges during volatility. It is vital for investors to maintain a disciplined mindset, set realistic expectations, and develop a clear investment strategy. By doing so, they can mitigate risks and enhance their chances of achieving their financial goals. As we wrap up, we encourage you to leave comments, ask questions, and share your thoughts on the topics discussed in this video. Your feedback helps us improve our content and fosters discussions that benefit everyone in our community. Whether you are a seasoned investor or just starting, your voice matters, and we want to hear from you. If you found this video useful, please consider to like and subscribe. And for more content, hit the notification bell so you never miss an update. We hope to see you in our next video.